Okay, so let's talk a little bit about distributions. So distributions could be in cash, could be in property. Again, any distributions, withdrawals from the partnership, decrease basis in the partnership. The nice thing about distributions is they're not taxable. Because again, think about it like a bank account. If you withdraw money from your bank account, you're not taxed on that money. You're not taxed on that withdrawal, right? It's your money. The fact that it's in a bank account as opposed to in your pocket doesn't change what it is and who owns it. You're not receiving income, you're just giving yourself the money that you already had. It's the same thing with a partnership. When there's a distribution from a partnership, essentially it's like a withdrawal. They owned that money in the first place. It was theirs when it was in the partnership. The fact that it's now being transferred to them doesn't change that. So distributions aren't taxable unless the distribution amount exceeds the basis in the partnership. Then there's tax involved. So here's an example. Dave. This one, Dave still has basis. And remember, any distributions are gonna reduce our basis. So at the beginning of the year, he had a basis of $85,000. He received a distribution of $84,000. His ending basis is $1,000, but he doesn't pay any tax on that $84,000. That was his money. He already paid tax on it. That money has already been taxed when he contributed it to the partnership or when the partnership earned it, and then he paid taxes as ordinary income, right? And all of the income of the partnership is being taxed to the partners, whether they get a distribution or not. So it's entirely possible for partnerships or for partners to have to pay tax on income that they haven't received yet. But that income is within the partnership. It's staying in the partnership. It just hasn't been distributed to them, right? So it's like interest income in your bank account that you don't withdraw, right? It just accumulates interest in the bank account. The fact that it's in accumulating that in the bank account and you're not withdrawing it doesn't change the fact that you still have to pay tax on it, right? So same sort of concept with that ordinary income. It's still income to the partner even though they didn't receive it. They didn't withdraw it. Well, when the distributions happen, that's when they're withdrawing it, okay? So it's the income that triggers the tax, not the distribution that triggers the tax. So, except, like I said, if too much is withdrawn. So here is another example where he receives a cash distribution of $86,000. Beginning basis is $85,000. $86,000 distribution. Well, now he's withdrawing funds that he doesn't own, right? He only owns $85,000 of those funds. He doesn't own $86,000. So what's going to happen is that additional $1,000 is going to be treated like a capital gain, and it's going to be taxed to him like a capital gain for that additional amount. Because again, we can't go below zero with our basis. So think of it as, so we started with 85,000 and had distributions of 86,000. Ending is negative 1,000. We can't have that. So this is going to be treated as income and it'll be taxed, which means it's as though he had $1,000, which will bring this then to zero. Okay? That makes sense? So anytime it comes below zero, that amount is then going to be treated as taxable income in order to bring that back up to zero. Is there questions about that? How that works? Okay. So there are two times though when like I said, the distributions, with distributions you aren't taxed on it. But couple of times when you actually could be taxed on those distributions. One is where we just showed what I just went through, that $1,000. When the distribution, the basis of the distribution is more than the basis in the partnership, that triggers a gain. The second one is called a pre-contribution gain. So when a partner, and this is sometimes, this is a method of trying to avoid gain on personal property, essentially. If a partner contributes appreciated property to the partnership, so say I have a building, I bought it for $100,000, but it's now worth $300,000. Well, if I sold that building for $300,000, I'd have a $200,000 gain, right? And I have to pay tax on it. I don't want to do that. So I contribute that building to the partnership. All right, so I contribute the appreciated property to the partnership. Within 7 years, that property is then distributed to somebody else in the partnership. So I didn't want to, let's say I've got that building, it's worth $300,000, and Jose wants to buy it, and we're partners together. So instead of, and he wants to pay me $300,000 for it, but I don't want to have that $200,000 gain. So instead, what I do is I contribute the building to our partnership, and then in a year, anytime under 7 years, Jose then takes it as a distribution from the partnership. So essentially, I've transferred that building, and Jose has the building that he wants, but I didn't have to recognize that gain. So that's called a pre-contribution gain. Contributing partner is selling the property essentially to the distributing partner and attempting to eliminate the gain by passing it through the partnership. Okay? If it's distributed within a 7-year time frame, then the contributing partner has to recognize any gain at the time that it gets then transferred out. So that's called a pre-contribution gain. So those are two instances when distributions might be taxed. All right, so basis of distributed property. Remember I said, so cash is easy. The basis of cash is whatever the cash is. $5,000 is $5,000. Well, basis of other types of property we have to determine. Because just like with when property is contributed to a partnership and the basis follows that property, same thing occurs when property is distributed to a partner from the partnership. The basis then follows the property. So as well as the holding period and the depreciation if it's going to be used for business purposes by the partner. So there is an exception though when the basis in the distributed property, whatever is being given to the partner, is more than the basis in the partnership interest. So recall, if we were to give cash and it was more than the basis in the partnership interest, then we'd have to pay tax on that additional amount. Well, when it's property, we don't pay tax on it, but what happens is that additional amount, the amount over and above the basis in the partnership gets tacked on to the basis of the property. Actually, it subtracts from the basis of the property. I'll show you an example here of how that works. So we've got Fonda. Her partnership basis is $6,000. She receives a distribution of equipment, so it's equipment. The basis of the equipment is $8,000. So that's more than her $6,000 partnership basis, right? Fair market value of that equipment is $5,000. So the basis in the equipment is going to be adjusted to the $6,000. So it doesn't bring her below zero in her basis. So the difference between these two, it's ordinarily that 8,000, that basis would carry over to Fonda. So the equipment in her hands would have a basis of $8,000, but she doesn't have enough basis in the partnership for that. So now the equipment is going to have a $6,000 basis. That means, so if she were to turn around and sell that equipment for $10,000, if it had a basis of $8,000, she'd have a gain of $2,000, right? But because her basis in the partnership wasn't enough to absorb all of that distribution, we had to reduce the basis in the equipment. Now her basis is $6,000. She sells it for $10,000. Now she's got a gain of $4,000. So that's when she's going to pay the tax on it, when she sells it. She's going to pay extra because that basis is going to be adjusted. Now what happens if she receives cash and property? Open that. So if she receives $2,000 of cash and the equipment, which had a basis of $8,000, but her basis is only, in the partnership, is only $6,000. So again, partnership, think of it like a bank account. She's got $6,000 on deposit, but she's withdrawing $10,000 worth of stuff. She doesn't have the $10,000, so that we got to do something with that extra $4,000 that she's withdrawing. First, she reduces her partnership basis by the cash distribution. So now her basis, her beginning basis, was, did I say 6,000? Is her beginning basis. First thing we're going to do is subtract the 2,000 cash. So now her basis is 4,000. But then she also had $8,000 of equipment withdrawn, but she's only got a $4,000 basis. So the basis of the equipment to the partnership is 8,000, but that adjustment, let's see, how do I want to say this? Okay, so that now she's at 4,000 minus the 8,000, that takes her to a negative 4,000 due to the equipment. She's not going to claim this as income though, because it was caused by a property distribution. What's going to happen is this 4,000 is going to reduce the basis in the equipment that she's receiving. So it's going to attach to that equipment. So the basis in the equipment to Fonda, 8,000 is what it originally was. We're going to subtract it by the 4,000 here. So now her basis is 4,000 in that equipment. So again, it's going to increase any gain that she has by $4,000 when she sells it. So with cash, when it's a cash distribution, when the cash distribution causes the basis to go below zero, then the partner is going to recognize income in the amount of the excess. Down here, the amount that it went negative. If it's a property distribution though, then the difference is going to reduce the basis of that property in the hands of the partner. Okay, when it transfers over. Questions about that? Let's see if we can do a couple of these here. So Nelson, let's look at Nelson here. Nelson has a partnership basis of $12,000. Okay, so he's going to start out with $12,000 as his basis. he receives from the partnership a distribution of furniture. Furniture is property. With a basis to the partnership of $16,000 and a fair market value of $10,000. What is Nelson's basis in the furniture after the distribution? Well, so 16,000, because he's got a distribution, so now we're at, what, negative 4,000? Ordinarily that basis, so Nelson basis would be the 16,000, but we've got to reduce it by the 4, right? You'll notice that that's the same as his original basis. Is 12,000 an option? Oh, D, none of these. Nelson's basis in the furniture after the distribution would be D. None of those. It's $12,000. Assume the same facts, however, Nelson receives a cash distribution of $4,000 along with the furniture. All right. So, that cash distribution, this is furniture, cash, what should it say, 4,000? So now that brings us in total, what do we have here, 4, so 8,000? So the basis in the furniture was 16, now we gotta subtract the 8, what the heck is that? 8,000 is the new basis. The answer there would be A. Okay, so whatever you're in the hole by, that's how much is going, that's what we're going to adjust our basis by. Questions? Oh. Wait. Seriously? All right. Put that up here for right now. I'm gonna pan over.